I always encourage people to really think through of not only the entry, but also the exit of those arrangements, or how will they be handled kind of post-expiry of that sidecar, and what are the investors really getting? And I think the other thing is what is actually coming into those portfolios of those sidecars. Are the investors really cognizant? Commercial auto risk.
The risk quality.
Welcome to 5 Minutes, your quick dive into the wide-ranging world of insurance, technology, and leadership. I'm Miguel Edwards, and I'll be your guide as we explore these topics that are transforming not just the insurance industry, but the business world at large. Along with sharing observations I've made over the span of my career in insurance, technology, and operations, I'll be chatting with some of the brightest minds in business and leadership. Whether you're a seasoned executive or a rising star, an industry expert, or just curious about how technology is revolutionizing insurance, this is your perfect spot for your weekly dose of insights. This is 5 Minutes.
So Joe, one of the things that occurs to me, I actually, interestingly enough, I got my start in insurance in program business. My first job was for Willis Programs. And so my first introduction into the world, 22 years ago was in the MGA space. And there wasn't anywhere near as much excitement around the MGA space then as there is now. Wasn't anywhere near as much investment and all those types of things. At least I didn't perceive it that way. But now it just seems like it is it. This is the thing. The delegated, underwriting authority entity movement is full steam ahead. What's driving that?
Yeah, I think a couple things. One, you're starting to see the business modularize like other parts of financial services. I think there's, some great headline exits and results in the MGA space. Okay. And also I think you're getting people who say, hey, this is where I can be creative and entrepreneurial, and this is where I can respond with closing the coverage gap in risk.
Sure.
Creating novel products and programs, where I think back in those old Willis Programs days out of New Hampshire, which is what you're alluding to.
Absolutely.
Fine business, a historically important business, but they were much more geared towards affinity and association business tied to the retail.
You got it.
And the business has evolved quite a bit. And I think as the cost of technology has come down, program business and the barriers to entry have shrunk quite a bit. And so that's making it a very hot sector, and a very exciting sector.
Yeah. Let me pull on that technology thread a little bit. So, with I guess, we call it the democratization of technology that's ongoing with, cost being driven down, and availability is just kind of generally growing. What are some of the hallmarks that you look for, whether it's around capacity or whether it's investment dollars in MGAs and how they leverage technology? What are some of the things that you're looking for that make that decision crisp?
Yeah, no, great question. So, I think a couple things. One is, do the people at the MGA really understand how they use technology? I always say, how is the sausage made, right? Including the casing and from start to finish. Do you understand the insurance product? How are you actually employing the technology? And how is it actually interacting with distribution, but also with risk capital? So you build that foundational level first, which always starts with first principles of capturing the exposure and experience information on the data side, and then building up from there. What is your interaction with your chosen distribution channel, whether that be retail or wholesale? What is that you're reporting back to the carrier, and what's your ingestion? And then now we're at a place where AI is starting to augment the underwriting in terms of pulling third-party data, validating or enriching the exposure information, and helping the underwriters on the underwriting workbench level make better decisions. For us, and the way I've always looked at it is, does the underwriter see technology as a tool, and helping them enhance their judgment, but also, underwriting still just as much of an art, in my view, as it is a science.
Sure. No, that makes a lot of sense. You touched a little bit around the kind of the MGA carrier integration. Do you have a perspective on whether or not we're headed toward an imbalance where the MGAs are going to have so much flexibility and technology capabilities that it just outpaces what carriers can do? And do you see that, and if so,
I think so. Yeah, no, without a doubt. I think the carriers are still very much in a catch-up, position. mean, you talk API and there's many carriers that look at you and they're like, I'm not sure what API really
Can I get that in Excel?
Exactly. Or like, hey, can I send, an ingestion of a bordereau or so forth? Still is very like hard to do, right? And so to your point, they're asking, can I have an Excel? Can you email this to me, right? And so forth. I think the ideal state would be almost trying to get it in real time, whether it's a flat file or API, and really connecting. So, you've got that transparency at the carrier level. And as the deeper risk capital comes closer to the distribution side, I think that's going to be increasingly more important. And the carriers that will win will be the ones that will be able to kind of truly partner with the MGAs and the program administration community to work with how the MGAs are going. But it's a journey.
Yeah, no, for sure. Something that I was actually talking with another one of my colleagues yesterday about this, and I'm always trying to be provocative with kind of thoughts and positions. Do you see a scenario where, I guess today, MGA spend a lot of time looking for capacity, and capacity is at a premium, if you will, finding good capacity partners, so on and so forth. Do you see a scenario where capacity becomes somewhat, I don't know if commoditized is the right word, but where there's a shift in balance where now carriers are now courting MGAs trying to place capacity because the MGAs now have the upper hand. Do you see that shift?
Yeah, I think we're kind of getting there,
really?
right? We're like 5-6 years into a hard market. The market's clearly softening. There hasn't been a meaningful windstorm event recently. I think we've got a couple more weeks left in hurricane season, but provided nothing happens on the wind side, it's always earthquake season though, right?
That's right.
You'll see some further softening in the market, especially in property and casualty as well. Capital is, you use the word commodity, is starting to become commoditized. So I've written about sidecars and investor capital coming in, wanting to partner with MGAs. I've had a couple conversations during this conference where folks are like really interested in doing casualty sidecars and property sidecars and just directly partnering with MGAs or with program carriers and say, hey, can I have a portfolio of this business and rinse and repeat? So the capital is almost coming to a commodity. I don't want to say it's quite there yet. But we're definitely trending that way for now.
Got it. We have a wide variety in our audience, Joe. Can you just go a little bit into the details around sidecar and what that kind of arrangement looks like? Sure.
So a sidecar is effectively like the best way to describe it is like a mini kind of insurance company, but really sitting in a reinsurance position where it's a dedicated pool of capital, usually from a few LPs or investors that will say, hey, we will support a particular portfolio of business within these parameters. Generally, those durations are 3 to 5 years in duration, and they're pretty obligatory in terms of what they'll receive from that portfolio, from that MGA or that group of MGAs. And that fronting carrier or that insurance carrier, they're becoming more and more popular, especially as folks from the investor community look for some diversifying risk that isn't correlated to the equity markets.
Yeah, no, that makes a lot of sense. It actually gives me a great opportunity to segue into another topic around the regulatory environment. I talk a lot with Don Walker at AM Best, and we talk a little bit about kind of what we see evolving around requirements and disclosures and all those different types of things. With all of the creativity and the flexibility, what do you see as, or if you agree with the fact that we're going to see increasing regulatory pressure on these constructs in the future and how we prepare for them?
No, it's good, really good question. I think you'll see not only some from AM Best, but also from regulators in terms of, hey, what is the credit quality of some of these sidecars? How is the collateral being put up? Is it in a Reg 114 trust, which means it's kind of like cash collateral, or is this a letter of credit? Well, who's the bank that's issuing that letter of credit? We've had that issue in China, right, with Vestu and some other folks as well. And I would say that also, after those 3 to 5 years, where did those liabilities, do they come back to the carrier? What's the development? What's the reporting time? All issues that still need to be worked out and aren't as always clean as once you get in. So I always encourage people to really think through of not only the entry, but also the exit of those arrangements, or how will they be handled kind of post-expiry of that sidecar, and what are the investors really getting? And I think the other thing is, what is actually coming into those portfolios of those sidecars? Are the investors really cognizant? Commercial auto risk.
The risk quality.
Commercial auto risk, for example, is a much different risk than like premises GL, right? For example, or excess casualty, where you have very long reporting periods.
Right.
And you can be kind of at the end and people think they're out, and it's actually just starting to ramp up.
Yeah.
Construction defects is a great example of that.
Got it. Yeah, that makes a lot of sense. Joe, look into your crystal ball, if you will. Is there a kind of I don't want to call it an end game, because it's always just going to be evolving, but is there something that you're preparing for as you just think about the industry as a whole next 3 years or so, where you see an evolutionary point that we need to be ready for, or you need to be ready for?
Yeah, really good question. I think a few things. One is AI, right?
Yeah.
How is AI? I think AI liability is going to be a huge, silent lurking risk that's going to touch almost every line of business.
Yes.
What does that look like? I think we're going to have really interesting challenges with what's the impact of AI on employment. Not only talking specifically insurance industry and how that impacts the industry itself, but how does society and the broader populace interact, and is AI can be a tool for good, but it could also be a tool for bad, right? And how are our insurance products responding to that, and the latent exposures that lie behind that, I think is going to be really, really important for the industry to figure out and address. In terms of capital, look, I think there's more and more capital coming into the space, and how are we going to deal with that as an industry? How are we going to build responsive programs and products to close the coverage gap is going to be important as well. So there's a lot of challenges. That's the interesting thing about insurance. To me, it's always a puzzle. And it just changes every month and every year.
Think you got it solved in it?
Yeah, you think you have it solved for a moment, and then it changes. So that's kind of my crystal ball, but who knows? We're always humbled, right, in this industry. So
that is for sure. Joe, this has been great. I want to wrap up with a slightly different topic in here, and I follow some of your content. You talk about leadership a lot, which is kind of interesting. And one of the things you talked about, I think I saw in one of your pieces, you talk about that in terms of being measured on how many leaders you create, right? And I think about some of my experience in this industry, and I don't know that I necessarily would say that the insurance industry has done a great job at creating new leaders, or kind of leaving a trail of leaders behind. You can actually even see it in vacuums in carriers where you've got retirements and nobody filling those gaps. What's the practical way to do that? What's the advice that you're leaving behind for folks to say, here's how you do that?
Yeah, no, great question. I think a few things. One is, I think empowering folks on your team to really step up and giving them opportunities, giving them exposures, bringing them to conferences like this and others, facilitating those relationships and passing it down, right? Meaning that I don't have to be in everything. Let them lead something and really develop those skill sets. Always be there for support, but bringing them along. And then two, really trying to pass on education. This is an industry with a ton of tribal knowledge that I think gets left behind as people retire out. And then thirdly is empowering some folks, especially we could use more women in the industry, and younger folks, as you mentioned, in the industry as well, which I think is really, really important. I think we can make this industry super attractive, and every time I encounter somebody who's young, they're like, I never understood how interesting insurance is. I always call it the oxygen of the economy, and I've learned so much about different industries just through insurance. And I'm like, it's infinitely complex, and I learn something every day. And you can build a really nice lifestyle, travel really well, make a really nice income, and there's immense potential for anybody in the industry. So empowering that as a leader and passing along, in my mind, is the most important thing we can do. we need to do more of that as an industry. And I think we also have to advertise ourselves better and in an attractive place for young people and other people to come into the industry. And so that would be my recommendation for the industry and for others watching this today.
That's awesome. Well, Joe, one thing you've absolutely done is you've validated something that I decided to do, which was to bring my youngest son here to this conference and serve as our production assistant. So he's getting to take in all this stuff as in terms of how awesome and sexy insurance is.
That's awesome.
So maybe I'll turn him into one.
Trial by fire.
Exactly. That's awesome. Exactly. Joe, thank you so much for your time, man. I really appreciate it.
Thank you. I really appreciate it. Great time.
Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.